out there. I'm really excited about stablecoins. That's one that I think is offering very concrete financial utility for people across the world. Specifically, Ripple's new stablecoin is one that I've been paying very close attention to.
What about that new stablecoin is on your radar?
Yeah, so I sold my first company to Ripple. I've been very involved with that company for a very long time now. And I think just throughout the years, they've been around since like 2013. So a decade of building relationships with existing financial companies is something that I think is super important when you're trying to drive adoption of these new technologies.
Anything else? For 2025, Austin?
For 2025, I think the growth of like real world assets, so like treasury bills on chain and tokenized securities, I think is a huge area for growth as well.
How is the incoming administration expected to impact this space?
Honestly, as an American who lives in New York City, building in this industry over the past 7 years, it's fantastic. I can see a bunch of other American builders finally excited, like we are going to get clarity from the regulatory perspective here, and that's going to unblock a lot of progress here. There's like very legitimate, valuable technology being built here, but if we don't get regulatory clarity, it's going to get halted from getting integrated into the rest of the financial system. I think everybody across the world is seeing a more like favorable perspective from a regulatory perspective. I think that's going to have huge impacts on the impact that it'll have on people's lives.
What is your expectation for the timeline of new ETF approvals by the SEC under Paul Atkins, of course, the president-elect's pick?
Yeah, I think downstream of this more favorable policy regime, we're going to see most likely a lot of more kind of open-mindedness across these different structured financial products like ETFs throughout 2025.
Austin King, co-founder and CEO of Omni Network.
Good morning, Warriors. Hello and welcome back to another episode of your favorite crypto news channel, Good Morning Crypto, where we bring you the most relevant and impactful crypto-related topics from a top crypto research team in the world. And today, Johnny Krypto, we've got the guest of all guests joining us, Austin King, the co-founder of Omni, and on the 30 under 30 list for Forbes. We're very excited to have Austin joining us. But first of all, Johnny, how are you feeling this morning? And thank you for being here.
Labs, I'm feeling great. And good morning to all the Word Maniacs out there. We love and appreciate you guys for showing up every single day like true warriors. But today's a very, very special day. As you said, Ab, I'm just excited as our guest for 2025. Not because of all the great things coming, but we got our man Austin King right here on Good Morning Crypto. I can't wait to hop into it with you, buddy.
So, Austin, we're going to talk about a ton of exciting topics. Our community is XRP centric, so they have been dying for this interview. Your prayers have been heard, people, and we're excited to be breaking this down with Austin today. Now, I titled this episode Ripple and XRP, the 1000x tokenization opportunity. We're going to be addressing tokenized assets, stablecoins, crypto regulation, and maybe the fact that for the first time ever, we have a United States that is pro-blockchain and pro-innovation. So before we get into any of that, how are you feeling, Austin? Thank you for being here. And what's on your mind? So much has happened here in early 2025. I think it's a phenomenal time to be breaking all this down. So once again, thank you for being here. And how are you feeling?
Yeah, I appreciate you guys having me on. And I'm looking forward to this. I mean, the macro thing that I'm most interested in right now is the tokenization opportunity. Obviously, Omni, like we plan on Omni playing a big role within that. But from, I've been building in this industry for 8 years now, and I've seen a lot of progress, but I do think the progress that we've seen so far will pale in comparison to what we see over the coming 4 years here. It's almost like we've been siloed off into this like experimental on-chain financial system. But now for the first time ever, we have an actual opportunity to merge that on-chain financial system with the existing financial system. And largely this comes under the umbrella of tokenization. So I'm hungry, I'm excited. There's tons of opportunity right now for builders in the space, investors in the space, and it has the opportunity to like really improve our existing financial system. So things are good right now. Markets are going up and down right now, but at large, very excited for where things are at.
Another exciting topic I'm looking forward to breaking down with you, Austin, is how you had the opportunity to work with David Schwartz and what that was like behind the scenes. But guys, today we're going to get right into it. The Ripple stablecoin and some of the threads that you've put out have been phenomenal. And you've talked about this being a 1000x opportunity because what is a stablecoin? It is a tokenized US dollar. So tokenization of real world assets fits into the stablecoin conversation. And we often play clips of David Sachs or Paul Atkins. And we understand that the first thing that will be addressed in the blockchain market is stablecoin regulation inside the United States. So with somebody who has such a long background in this technology, maybe you can explain what gets you so excited about stablecoins and why you've called it a 1000x opportunity for the ledger. Floor is yours.
Yeah. So I will speak first as an American and why I'm excited about this. I love my country. My country has done some dumb stuff historically, like that. That is definitely true. But the way that we're looking at the opportunity here, I think makes a ton of sense. I actually had a friend who works in private equity send me an email last night. Like he forwarded some like crypto FUD of just like, the US is making a huge mistake with not having a CBDC because now China, everybody is going to use China's CBDC. And I was like, no, I mean, think about it like you manage other people's money. Are you going to prefer to keep a digital yuan where the Chinese government could just delete that at any point in time or restrict your ability to move it? Or would you prefer to use some like stable coin that is fully collateralized by the US dollar? Obviously, you as like a manager of other people's money, you're going to prefer to use the US dollar. So I actually think the stance against CBDCs that Trump is taking is a huge competitive advantage for America. So I'm super excited about that at large. Thinking more kind of like as a builder in the space now, I do think that the tokenization of like assets at large is the biggest opportunity. But a lot of people don't think about stablecoins as like RWAs, but really they are. They're the first RWA with product market fit in the industry, and they provided a huge utility to the industry for many years now. And so I do think that we are just at the very beginning of this. You know, we saw Stripe buy a company for like $1 billion because they were working on creating stablecoin APIs. Everybody is starting to understand, and it's not just crypto people, like the entire fintech and finance industry is starting to understand the benefits of stablecoins on chain. And I do think that the influx of mindshare and like actual capital into the space is going to have huge benefits to all the like platforms that are out there and leaning into this today, like XRP Ledger.
So when we think about tokenized assets, a lot of people think about stocks, bonds, treasuries, and you've done some phenomenal interviews kind of breaking that down. But what we've tried to tell our listeners is that if you're patient enough, we're still very early in this crypto journey. A lot of people will focus on those 4-year cycles of liquidity. Value goes up, value comes down. We often talk about creating a plan for that, but compartmentalizing it and putting it to the sidelines, I think in the macro, we are still so early in this adoption phase. It's projects like XRP, XLM, HBAR, and so on that are yet to have their real world utility moment. Can you explain to people how tokenized assets, we're still at the precipice or just the very beginning of this asset class, and how we already have 6,200 people here, guys. If you're enjoying the show, show us some love, smash that like button, give a special thank you to Austin for making time for us. I also want to encourage people, ask your questions in the live chat. We'll be selecting a few questions and asking Austin those live on air. But when you think about tokenized assets and what they have the potential to be, every stock, every bond will inevitably be tokenized. It's really about when that happens, not if. Can you explain that to people who may not fully be able to wrap their head around the concept of tokenization and why that's so important?
Yeah. I actually think it's pretty simple. It's kind of like left curve in understanding the utility of it. And this is not some just like stuff that me being a builder in the space is like, oh, it'd be so great if everything was on blockchain. Like Larry Fink keeps going on, like Larry Fink, the CEO of BlackRock, managing $11 trillion, keeps going on like CNBC being like, I am actively requesting that the SEC legalize the tokenization of securities and bonds because this guy runs a gigantic asset management firm. And what's happening is behind the scenes, they have to do so much manual paperwork effectively to just move things around. And tokenization, really the way to think about it is just like, can we actually just get computers to run our financial system? Can we make things programmatic? Can we just have algorithms run this instead of like me emailing John from the other department, approving this transfer, it taking 3 days, like that? The financial sector has been held back from the innovations that the internet has enabled. We've seen the internet change so many parts of our lives fundamentally, but it has not impacted finance yet. And so tokenization at large, really, if you just like want to understand it in a simple way, it's allowing the innovations from the internet to eat into the financial sector so that our financial system can just be programmatic by default.
Yeah, I'm so glad you said that, Austin. That's one of the things we talk about on the show all the time. A lot of people don't understand that. What we're talking about, the whole blockchain technology and crypto, it's all going to be more behind the scenes, the back end type, right? The front end has been done for years.
Nobody cares about a tokenized stock. Like that's not the point that a user,
Yeah, the users don't care. Like nobody cares right now how I'm talking to you. Nobody cares of all the big behind the scene VOP and everything else that's happening on the behind the scenes to make it happen, except for the companies that incur the costs for that to happen. And that's why there's no question about it. I keep telling them, but this is coming because it's a cheaper, better solution. And what are companies looking for? Want to improve the bottom line. And so it's real funny because the big companies are starting to wrap their heads around, like, oh, wait a minute, there's something here, as you just said. And now they're starting to finally come in. What's exciting about it is for the first time in our lifetimes, we had a chance, everybody here in our chat and yourself and others, to kind of front run the big money that's coming in. All right. As you mentioned, with regulation coming soon, that's going to start to also kind of, I think, draw the lines on where you can play. Companies have been held back in the US. It's sad, for the past 4 years, rather than innovating in the space, they're worried about touching it, figuring out where they're going to go do it outside of the country. And I'm excited for you, also being an American, that finally I feel like this will be our time where America can now put a stake in the ground and say, okay, now we can finally play. We're going to fix the back end on things. And that's just going to, and when companies start realizing that, I think that's when we see just the unlocking of tons of money coming into space and taking it to a whole new level. Versus we're at 3.3 trillion today. Where do you think this industry can go? If you look at the market cap of this total space right now, 3.3 trillion, and you just think of all the future innovation that's coming, I'm curious as to how high you think this market cap can go.
I mean, I'll caveat it by saying this will take time, but I believe this for 8 years, and even more than ever before, I believe this today, that this technology is going to eat the entire financial system, like all of the hundreds of trillions, the entire financial system will run on this technology. Like, that is going to happen. It will take time to onboard it. And I dropped a post last night kind of talking about what is the spectrum of tokenization that is going to happen here. It's not going to be boom, it's all on chain. We're going to onboard different asset classes. And we're starting with tokenized stable coins. Now we're kind of dipping our toes in tokenized treasury bills. We're going to keep expanding like that. But the end game of this is that we have an open, permissionless financial system that runs on chain. And what we see today is almost just like kiddie games compared to what this will become. We play with meme coins and stuff. These things just don't make sense. They're experimental. They're just playful. But we will continually onboard the existing traditional financial system. And that is where the real value of this is going to show.
So that kind of fits into our narrative, Johnny. I'll kick it right back to you for a question. Is we've always said that there's going to be a moment where this market becomes regulated, and there's going to be a certain set of projects that survive and thrive, and there'll be this consolidation of wealth that occurs. And then there'll be this other set of projects, which is much larger, coincidentally, because there's so many projects today, that will diminish and maybe even cease to exist. So do you share that same sentiment that there's going to be a few dozen projects that kind of absorb and consolidate all that crypto wealth after regulation, or do you have a different perspective on that?
No, I definitely agree. But we're going to see a decoupling here where right now we're in this experimental, playful world where people can ship the modular liquidity network for decentral, they can just say buzzword pasta and the value of a project skyrockets. But increasingly where we're going though is these networks will be able to demonstrate real fee generation and revenues. And that's going to make the rest of them look very immature and fake, honestly. It's very difficult to tell what is real and what's going to provide value today and what is not. But what we're going to start seeing is just very clear fundamental metrics oh, wow, they just onboarded $100 million of corporate bonds yesterday. What is that going to imply? How much money are they making from that? So I think that, I very, very rarely speak negatively about any project, even if I don't have a ton of respect for it privately. But I do think at large, what we're going to see here is a consolidation around projects that are really leaning into this tokenization opportunity, because that's where the money's going to be. That's where the fees are going to be. And increasingly, there's going to be a feedback loop where the better those projects look, the worse other projects are going to look. So yeah, I mean, I can just tell you personally, right now I'm at a point in my personal portfolio where I'm taking a good hard look. Do I believe in this project on a multi-year time frame? And if not, even if some of these positions, it hurts. I'll tell you right now, it hurts to sell them, but it just makes sense. If I don't have multi-year conviction in tokens right now that I'm holding, it makes sense to drop them and reallocate, either pull it out entirely or reallocate to projects that I really see making moves and that I believe are going to drive value in the long term here.
Yeah, I couldn't agree with you more from that perspective. Hey, one question I have for you. I always get grief for this on the show.
Yeah.
We have this chart, and if Abs can find it, you can pull it up. but it basically talks about the speculation phases of a technology versus when you move into utility. And everybody in our, our group in the world, I hear a lot of people talk, oh, we're in utility. We're finally moving to utility. And being in the technology space, and you who've also has developed a company in this space, I'm curious as to where you think we are along, so you can also see the blue as the S curve there as we move from the ideation phase to full-blown utility on the S curve. And obviously that adoption gap typically takes 10 to 12 years. Everybody thinks we're in utility, and I'm always finding like we're not even close. But I'm curious, I would love to know, where do you think, without influencing you, I want our audience to hear your thoughts. You think we're in speculation? You think we're in full-blown utility? Are we a little bit along the line? Where do you think we are on this graph?
Yeah, I mean, this is similar to what I was talking about with like this experimental phase of where we're at in the industry. We've taken this crazy timeline where we've effectively bootstrapped the technology in this on-chain financial system with these like super weird, like not mostly pointless, but like some of these assets are pointless. And it's pushed us to a point where we've been forced to handle higher load at large. So we have innovated, and now a majority of transactions are like nearly instantaneous and free. That is what we needed to do before we started onboarding the like real traditional financial system. But that is just beginning. Like we really are just dipping our toes into like one asset class past stable coins. Really just like there's about like $1 billion worth of treasury bills on chain right now. But the US alone has $28 trillion of treasury bills that it has issued. So even just within that one singular asset class, we have just dipped our toes, let alone all of the other asset classes. So kind of what I think is going to happen here is we took this like really weird underground development perspective where the government hated this technology for a very long time. It's been roughly like 15 years, and that forced it to kind of grow in this weird casino degen way. But the technology is at a point where it's basically free and instantaneous to use this stuff. Now we can start onboarding real finance. Like it's not going to perpetually be this casino. That was just like the bootstrapping phase. So I personally think that we are like just a fraction of a percent of the way into driving like tokenized assets on chain and actually having an open permissionless financial system for the world.
So basically we're in the beginning. We're
TLDR,
just getting started.
We've barely taken one step forward in my perspective.
So that's optimistic, Johnny, because that means the majority of opportunity is still in front of us. And what we've realized about our community in particular is that we have a lot of people who just started watching our show in the last calendar year. So less than 12 months ago. That means that many of them are coming in asking the question, am I early or am I late? Well, from a utility perspective, we're so early that we're not even feeling that appreciation of gains. But I wanted to bring something up to Austin they had referenced earlier. It's getting a lot of attention in the live chat. As you had discussed, which projects would you survive and keep over these next few years? What are some of the defining factors that you look at to decide whether a project is going to be here for several years or whether it may cease to exist after regulation occurs?
Yeah. Honestly, I think the best thing to do is just to ask yourself, do I understand what they're saying? There are so many projects that, like I said, they just say buzzword pasta, like modular abstraction, blah, blah. It's like, if you read something and you're like, it sounds sci-fi and cool, but I don't really get it. Honestly, don't put your money there. Cause like, if they cannot explain to you well the value that they are providing, they probably can't explain it well to other people, and they're likely to fail to drive adoption of their technology. However, if you do find projects that like you read it and it doesn't feel like some crazy thing like, oh, it sounds really smart, maybe I just don't get it. I've been burned like that before. I have put money into things where I'm like, I don't get it fully, but like maybe there's something here. That's not the way to invest in this space. Just like if you find a project, if you can read what they're saying and it makes sense, and if you believe that is the like trajectory this industry will follow, that is something that I would consider personally investing in. And that I think is just a very good litmus test. Like, don't fall for the hype. Just like, does it make sense? Is what this project is talking is what this project is talking about? Like, is that a real opportunity? Is that a real thing? Okay, cool. Consider it at that point. That's kind of like how I'm thinking about it at this stage. But I do think it is extremely early at large, because we just really are dipping our toes in terms of actually onboarding a real financial system here. So at large, yeah, that's how I would think about investing at this point.
Thank you, Austin. I want to give a massive shout out. We have 10,250 people here joining us. Show us some love. Smash that like button. Hashtag Austin King in the chat, guys. And a quick reminder, we have a standard here on Good Morning Crypto. If we break 1,000 likes on the live stream, we stick around for at least 5 minutes of overtime. So I want to give a huge thank you to Austin. Now, we're going to try to extract as much value as possible from Austin and give it to our listeners today. And one of the questions that we continue to get is that utility question. So I felt like it would be valuable to start there, but let's shift into a regulatory discussion. Now, when we do a lot of our interviews and we hear these behind the scenes conversations, stablecoins is the #1 topic of discussion, but decentralized assets seems to be the second thing on the ballot. Maybe you can give your perspective there on what are your thoughts on decentralization, and if is that even going to be an important narrative post-regulation? Because after listening to Congress speak yesterday, they put a very negative spin on DeFi and decentralized assets, because without a centralized entity, it opens you up to quote unquote nefarious activity. As a developer in the space who's working with people behind the scenes, what does this topic mean to you? And do you think decentralized assets are going to continue to survive, or may they be regulated out of existence because of what Congress pointed out yesterday?
Yeah. I'll answer the second question first and then move on to stablecoins. So I actually think it's very funny to pose something that's decentralized as opening you up to nefarious activity, because by definition, if it's decentralized, you can see the structure of it, and there is no centralized party that can be nefarious against you. And so likely what they're referring to and conflating is that, there are scams in this industry. Like, if you do want to scam people, crypto is probably the place to do it, because it's just like an open financial system, and the government has failed to put regulation in place so far. But I do think that decentralization is the opportunity to remove any chance of people getting screwed over, because everybody can go and inspect it. We saw a great counterexample, FTX. That was a centralized entity, and that scammed people out of billions of dollars just because we were trusting some intermediary to do some financial service for us. What we're creating here is something that doesn't need intermediaries, and everybody can go look at the code, everybody can go evaluate it, and you can just use these systems that are open and transparent. So I understand that there are Congress people that have citizens that have probably clicked Moon Boy, Portnoy, blah, 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 and lost money. I get that. That's, we should protect people from outright fraud and scams. What we should not do, though, is restrict people from opening or from accessing an open financial system. That, I believe, that's fundamentally paternalistic and restricting our freedoms at large. People should be able to do whatever they want with their money. Using your money is fundamental to your freedom of speech today. Everything costs money. Like driving to a protest, you have to buy gas. And so fundamentally, government should not have the right to restrict people from doing what they want with their money. That's my perspective on this. The stablecoin part, I think it's extremely important that we get stablecoin regulation. And it's a huge failure of the government to not have done this yet. To let it grow to this scale without passing regulation is, I don't know, just a huge failure of government in my perspective. And it's hurt people. And people don't understand that the Biden administration really failed this industry in many ways, and it hurt investors by just letting it grow and not actually taking a look at what is good about this and what do we need to prevent from happening. And so stablecoin regulation is good. If people are holding something they think is worth $1, it should be collateralized by $1. That is simply the case, especially if we don't have a central bank digital currency. Where everybody's okay, this is the one given out by the US government, then they need to be able to trust private institutions that are issuing these stablecoins. So if you are publicly saying this is a stablecoin, my perspective is you need $1 equivalent that is just actually being held to collateralize that stablecoin. This is something that I feel pretty strongly about, because it's a huge opportunity. We see people in Argentina fleeing their local currency into stablecoins. This is going to be the way that the US government exports the US dollar throughout the world, and people need confidence in these stablecoins if there's not one that's issued by the central government. And there shouldn't be one issued by the central government. That is a huge threat to freedoms. But yeah, it's good seeing people talk about this. There's clearly these Congress people need to continually be educated, though. I was watching some of that yesterday, and some of the comments were okay, you guys, decentralization is not bad. This is good. It literally helps avoid the SBF scenarios.
we often use the analogy, Austin. It's like you have an iPhone, you can do something bad on this iPhone, you can do something great on this iPhone. It's totally up to the user. Same idea with crypto. It's a new technology. There's going to be people who use it for nefarious activities, and hopefully we can catch and expose them. And there's going to be people who, like us, are excited about the development of a new asset class and would like to capitalize on that growth. And I want to give a big shout out to our live chat, because we have a lot of, like ourselves, middle-class Americans who see crypto as an opportunity for a better future. That's something that we're going to elaborate on later in the show. But Johnny, I know you had a question. I'd love to give you the open floor, and then we'll continue.
It's actually more of a comment. I couldn't agree more with you, Austin. I think the U.S. government failed miserably.
Yeah.
I don't think it was because they were ignorant. I think it was on purpose, because when you think about new technologies that come into play, there's an old guard and there's a new guard, and there's a lot of money at stake here. When you're talking about an entity or several entities or elites that have put systems in place for hundreds of years to control our monetary system, and all of a sudden that's at threat, no surprise to me that they're like, hey, we're going to slow this thing down. We're going to do everything we can to stop it. And I think, there's really what we talk about, the 4 stages of the evolution of technology. First, they ignore you, then they laugh at you, then they fight you, which is that stage we just went through the past 4 years with brutal attacks by the SEC. And then finally, then they join you because now they got their hands wrapped around it. But the sad impact here is, Austin, what really happened is, you said it. Not only did people get hurt, but America got hurt. Think of all the innovation. Think of all the jobs that could have been in here. People, Americans, sitting at home right now looking for work, but they could have had a job right now working for potentially a blockchain company, a software company, firmware company, right? And instead, those jobs went overseas. Mm-hmm. It's really, really sad. Really sad, right?
It's a serious problem. Like,
huge.
As somebody who is built in this industry, like I had a company before this. I worked at Ripple, and this is my second company. Like, I had a very serious conversation with my co-founder before starting this company. And I was like, look, it's possible that the US government implements some like blanket bans on this technology. And we had to have a very real conversation. Like, look, we both love this country, but if the US government does that, are we willing to leave this country, go live elsewhere, and continue to build this? Because that's like the level of commitment that you like need building in this industry, which is a crazy conversation to have when you're just like some people trying to build a company and contribute to something that you think can be like beneficial to people. But we literally had to have like, are we down to move to Asia if we really need to conversation? And, luckily we were aligned on that. Like, we will do whatever it takes to build this, because this is fundamentally good for human society. But just the fact that we had that conversation is absurd. And there is so much innovation that has been pushed offshore. So I am very happy to see the US government taking it seriously, because I'm biased. I'm American. Like, I want to see America like thrive with crypto. Fundamentally, I think the financial system should be like controlled by nobody, and like that's what's best for humanity. But like, I'm an American. Like, I do want to see my own country do well in this. So I am very grateful to see that we are like stepping forward positively with this right now.
Abs, this is where you put the MAGA hat on now. God bless you. There we go.
Listen, I didn't want to get Austin in trouble, guys, but the MAGA hat is always just to the left of my laptop. And something that I think our listeners would appreciate, Austin, and I'll put the Merlin hat back on out of respect for Austin, right?
No, I mean.
So one of the things that we often talk about is being able to front run the institutional liquidity. And so I'd like to have a conversation about how our listeners can make a lot of money after regulation is launched. We did discuss this, right? If your project survives regulation, there's going to be a consolidation of wealth there, but it's also going to open up new opportunities for companies like BlackRock, Fidelity, and so on to not only offer tokenized assets, but to get their clients involved in crypto. And that can be done through retirement funds. That can be done through the utilization of tokenized assets. But the overall question that I have for you is, when you look at this market and the new opportunities that are being presented, does market cap play a factor here? And this is a discussion that's a little bit speculation, right? Maybe I should put the tinfoil hat on for this part of the discussion. Yeah. But oftentimes people will focus on the market cap of a particular project and use that to decipher how high the value is going to go. What is your perception on market cap, and how do you factor that into when you're looking at some of these crypto projects?
Yeah. So market cap is a factor, just like price and liquidity. It is undeniably, it is a factor. I do think that there are different mental models that don't map directly from traditional finance to how to think about these networks. So like, for example, like Bitcoin, how should you think about the market cap of that? Like, a lot of people tend to be like, okay, well, gold is like 10 trillion. And if this is digital gold, it's kind of like nobody has a correct answer on like what the value of this is going to be and provide to society. But there are more risky investments for sure. And so, for example, like at Omni, we're working pretty closely with Ripple on like how to drive expansion of RLUSD. These are two very different stage projects, though. Ripple is worth like I think like $150 billion right now, and Omni is like $500 million currently, and that's fully diluted. Like circulating, it's like $80 million. So objectively, Omni is like a very different type of asset than XRP is at this point in time. It's much earlier in its journey, and so with these kind of like different stages of assets and the maturity of where they're at, the earlier ones, there are going to be like higher possibilities of return, but there's also greater risk there. And so if somebody is just dipping their toes in the space, like keep that in mind. Like assets that do have larger market caps, it's way less likely they go to zero, So like don't just like enter the space and have the first coin you be something that's worth like $1 million in market cap. Like you're almost certainly going to lose your money if you do that. But like as you get comfortable and kind of like dip your toes into the space and become more educated, yeah, you can explore these different types of assets, and then you're going to see a potentially like higher return, but also like you will be taking on proportionally more risk in that as well. So market cap does matter, and especially for people who are like just learning to get involved. Honestly, I think right now what's happening with altcoins is altcoins have gotten smacked over the past few weeks, like seriously dropped in value. And I do think this is the market reacting to a lot of people were kind of predatory with new people that were interested in crypto and shoved them into meme coins. And the return profile for meme coins, that's like the shittiest possible asset that you can like have people enter. Yeah.
Sting.
Yeah. And so like almost everybody,
market, right? It's like a penny stock.
Yeah, it's worse than a penny stock. It's some random dude just being like, yo, let's see what they do. And so I think what we're seeing right now is there's greater consolidation around these larger assets like Bitcoin and XRP, because people are like, oh my God, like all my friends lost money on these meme coins. Like maybe we should just buy these like bigger assets right now. So this has hurt altcoins. But honestly, from my perspective, I think it's very healthy from a long-term perspective. Like I want people to come into this space and make money. I don't want people to get funneled into meme coins and some dude in his basement is like predatory and dumping on them. That I think is like how we get people cynical about this space. So I do think if you're just getting involved in crypto, honestly, just like look at the largest market cap assets, go read about each of them, see whichever ones make the most sense to you and start there. Don't go directly to meme coins. I think we're paying for that as an industry right now. And like the entire altcoin market is suffering because a bunch of retail entered, lost a bunch of money, and they're like, this is a scam. And so if people consolidate around these like larger coins for a bit, I honestly think that's healthy. Like even though Omni is not one of those larger coins at this point, like I think like on a very multi-year time frame here, and that is what we need. We need people entering the space, excited and making money, like not just like losing it out the gate. So yeah, that's how I would think about investing at this point if I was just getting involved.
And we never talk about meme coins. That's one of the things our community understands because we like to take the long-term approach to investing. Are you going to be able to find a slot machine that where you get lucky, you pull the right lever and you end up winning some money? It's possible, but it's not an investment strategy to accumulate wealth in the long term. If I could change the conversation just a little bit, I'd love to get into your discussion, into a discussion about some of the things you were able to witness about the vision for Ripple. And people often talk about Ripple being an on-demand liquidity company. But as I go through a lot of your Twitter threads and hear a lot of your speeches, one of the things that's so important is this tokenization discussion. Can you talk about some of the conversations that you've been privy to behind the scenes, whether it's with David Schwartz or just people building on top of the ledger, and what the vision is for tokenized assets and how that impacts people in our chat, right? Is it going to increase the value of the token? Is it just going to profit the company Ripple? I'd love for you to break that down if possible.
Yep. Yeah. So one thing I'll clarify, sometimes I get in my replies, people are like, yo, are you still working on Omni? And I'm like, yes, I spend 12 hours a day working on Omni. So the reason that I'm very interested in like tokenization, XRP, and these other assets is because Omni is effectively a cross-chain network that allows people to just do things across all these different chains and not have to think about it. So like there's a really strong opportunity for us to synergize with XRP as more issues or as more assets are tokenized on the XRP ledger. Because Omni can expand those throughout the rest of the on-chain economy and drive economic activity throughout the rest of it. So that is why I think so much about tokenization. It's because Omni is going to play a key role in that. So to answer your question about like, what is the impact that tokenization is going to have on like XRP and Ripple? Ripple probably has the opportunity to make money off of this, but think game theoretically about it. If you're a Ripple, Ripple owns a ton of XRP. And so it's more in their rational interest to have that value accrue to the XRP ledger than to just like charge SaaS fees. Because everybody then is going to see that the XRP ledger is accumulating more fees, and that's going to increase Ripple's balance sheet. So that's not even like a private conversation type thing. That's just thinking like, think about it from first principles. It's actually in Ripple's self-interest to grow the value of XRP. I can say that because I no longer work there, but like, like that's obviously in their interest. Like they want XRP to go up. They can't say that publicly in any comms because there are like regulations around like stating about like some asset you're working with, like whether price will go up or down. But I can tell you as like, just think about it. Like they hold a bunch of it. They want the number to go up. So are they going to like accrue all those fees for Ripple? No, they're going to push the value to XRP Ledger. So what is the impact that tokenization could have on XRP Ledger? Effectively, my perspective from the like conversations I've had internally with them and stuff, my understanding is that what they want to create is a large, they've always really, if you zoom out, they've always wanted to create this. They've wanted to create the platform that onboards traditional finance. Originally, that looked like payments. That's like the easiest way to get involved. But where they're shifting now is more this tokenization opportunity, and RLUSD is the first step in there. You know, we saw Ondo announce that they're going to launch their treasury bills on XRP Ledger as well. So like there's like steady like progress happening on this front. But from my perspective, the actual strategy here is Ripple knows that there are going to be more chains. They've always known that. If you go back and like watch videos from literally 2013, they talk about how interoperability has always been key to their vision. And so they actually don't focus on interoperability. They focus on the XRP ledger. And so like that's where the like Omni XRP synergy comes from. But what they want to do is they want to establish XRP Ledger really is the foundation that onboards traditional finance into the on-chain economy. Omni then will take those assets, spread them across the on-chain economy into these different lending protocols, these trading systems, these derivative protocols, and these assets will be able to be used across them. Strategically, where this would put XRP Ledger is like the main issuance hub for all of traditional finance into the on-chain economy. So from like the conversations I've had with them, as well as if you literally go back and look like a decade previously, like they were talking about these ideas. So they want it to be the issuance hub for traditional finance. And then they want to work with partners to distribute those assets across the rest of the on-chain economy to strategically put themselves at the center of all the different chains, because they know there will be different chains.
Wow. Johnny Krypto, I'm going to give you a chance to comment. We'll continue.
I mean, it makes sense for them. We saw that for a while ago where they were first, so all you kept hearing was cross-border payment solution. And then, you know, Larry starts coming out talking about tokenization, and everybody wants a plan there. And lo and behold, you start to see the shift in strategy where a lot of companies now are going after that. But to me, it makes sense that that is where we are going to see the whole entire world basically become digitized. Or if you want to, you know, an analogy I like to put out for our audience, Austin, is pretty much it's like NFTs are like shares of stock, right? So just envision the whole world becoming a stock market, the whole entire thing as it gets tokenized. And basically what you're saying is XRP, their role, or Ripple, they'll play the role in helping the world get tokenized. But then when you're tokenized, what Omni does is comes in and helps them go cross-chain to be able to put it in different technologies, to be able, like you said, whether it's DeFi or be able to earn or be able to sell. I think that's where maybe they fell. I don't want to say fell short side, but I guess they were focused so much on the tokenization piece. They didn't think about initially how do you ensure you have interoperability. And I guess that's where Omni comes in to be able to ensure, kind of like Quant or like Link. I assume it's similar to that, where it's trying to bring, rather than having siloed chains, we're going to have all these chains that can crosstalk and work and integrate with each other, correct?
Yeah. I mean, mostly, yes. The nuance I would throw in there is they were thinking about interoperability. Actually, like they built an interoperability protocol called Interledger, and this is what my whole first company was focused on before Ripple bought it. So they've always known that interoperability would be key to this. Chris Larson, actually, the like founder and chairman, explains extremely well in a very like, I don't know, this guy is on another level, but he explains it like this. He's like, globalization today is not working as well as it could because we do not have an internet of value. And so today there's actually two internets. Most people don't think about it this way, but there are two internets. So the one that we all know of is the internet of information. And like, that's, you know, how we're talking to each other in totally different places right now. We're all familiar with that. The one that people don't know about is the internet of goods. And so this came from the standardization of shipping containers. This is kind of trippy, but like, think about this. So we didn't used to have shipping containers. We used to just like, I don't know, get random stuff and put it on boats and then ship it to other countries. But what we came to an agreement on internationally was we were going to use shipping containers. And so this allowed us to create far more efficient shipping boats at large. But think about the shape of a shipping container. It also fits perfectly on a train. It also fits perfectly on a semi truck. And so this shipping container was like a fundamental design, opening up the internet of goods. And this is how we have an economy where like a bunch of Americans like get goods and they're manufactured from all across the world. And so Ripple's perspective here was that we're going to need an internet of value. And so interoperability has always been key to that. And yeah, I was the one who built the Interledger network originally, and we scaled that up before Ripple bought it. Where we're at now, though, is it's scaling past payments. The Interledger network was extremely good at payments. We processed over 10 billion payments before we sold our company to Ripple. And so now it's about like expanding past payments into assets at large. And so the way that I like explaining like strategically how I'm thinking about the relationship between Omni and XRP is like in the center, we have XRP. Like, cool. On the traditional finance side of things, we have Ripple to push institutions to tokenize on the XRP ledger. This can help accelerate the growth of XRP ledger. But what it doesn't have out the gate is the on-chain, the like decentralized side of that to distribute those tokenized assets across the on-chain economy. So in many ways, like how Ripple accelerates the growth of XRP ledger, we're thinking about that from the like decentralized finance perspective, and using Omni as a way to accelerate the growth of the XRP ledger. So strategically, that's how I think about it. And for anybody who's wondering like why I care about XRP and like why, like, okay, if I'm the co-founder of Omni, why do I care about driving the growth of XRP ledger? It's because we like working with winners. Like that's just straight up like is what it is. I think that XRP Ledger has the best opportunity to tokenize the world's assets because think about all the relationships they have from Ripple of just building that over the past decade. Just given that I sold my previous company there, I have a lot of relationships. So it just makes sense. It's like, if this thing is going to be one of the highest growth things, like how can we create synergies there so that Omni can grow alongside XRP? So that's how I think about Ripple, XRP Ledger, and Omni.
I want to get into a fun conversation here, and we can kind of keep this short, Austin. First of all, we got 14,700 people here. Smash that like button. Massive thank you to everybody who's commenting and supporting us in chat. If you want a little bit of overtime, you got to help us break 1,000 likes. We are currently at 600 and something likes. I can't check the live feed, but smash that like button. Give a huge thank you to Austin for being here. Now, Austin, a fun conversation that we've been having is there going to be a day where an altcoin dethrones Ethereum? And obviously, the altcoin that we've been discussing is XRP. And obviously, it fits into the conversations that we've had earlier today. The prospect of tokenized assets, the stablecoin, and all the new exciting things coming to the ledger. My question to you is, do you believe there'll be a day where another altcoin passes Ethereum in market cap? And if so, will it be XRP? Maybe you can explain your reasoning, and then we'll get into some more serious topics.
Yeah. You guys are going to really put me on the spot here and make my ETH community hate me. Yeah, I mean, my simple answer is yeah. I do not think that Ethereum is going to be the second largest. I don't think ETH, the asset, is going to be the second largest market cap coin if we're looking into the future here. And so, yeah, I mean, I'll just give you my unbiased take. I've built in the Ethereum ecosystem for a while. I built in the XRP ecosystem. I've worked in the, I like integrated Lightning Network in like 2018 into the Interledger network. So I've worked across all these like major networks. And honestly, Ethereum is not, ETH, the asset, is not in a good place. And so the TLDR on what's happened is it had this like fantastic opportunity where it was the first like really large scale deflationary network. So like not only was it finite supply like Bitcoin, there was actually less Ethereum each month that passed. So this was super cool because it was literally a deflationary currency. That's not the case anymore. It started externalizing activity to these L2s, which most of them are just run on a single computer. It's not even like they're like a decentralized network. And it's inflationary again. I can tell you, so my background, like I studied computer science at Harvard. I did a ton of engineering in my first company, and I do a lot of research here, even though I'm not coding anymore. My engineering brain does not see a path to Ethereum ever becoming inflationary again or deflationary again. And so, I mean, this past weekend, I was talking with more kind of like ETH insider people, and like a lot of people are bearish right now because none of us like can think with our engineering brains and see a path forward that is super bullish for ETH, the asset. So do I think that other coins will surpass? We've talked about this, like the flippening idea for a while. It's been talked about this with like XRP and Sol flippening ETH. Yeah, I mean, my simple answer is like, if you look at current trajectories, I do think that Ethereum is going to fall from being the number 2 asset in market cap. And honestly, there's a number, like I think Sol and XRP are both like serious contenders for that number 2 spot today. So I hate to say that as somebody that has like really, I really care about Ethereum. Like I have for years, and I've tried to contribute a lot to that ecosystem, but thinking like pragmatically about the like how the market is viewing this asset, kind of bearish. Actually, not kind of bearish. It's like pretty, it's pretty bearish.
Johnny Krypto, any quick comments there? And then I'll get into our next topic.
Well, I think, it's like any technology that has a first mover advantage. That's really what Ethereum had. Came out. Remember, there was just Bitcoin, then Ethereum came out, and it added another layer of smart contract capability, which Bitcoin didn't have. They really were in a pole position to be able to take this thing off, especially being in deflationary, as you said, Austin. And then, of course, when they kind of sold out Joe Lubin and they did their they did all their things to really profitize on this thing, and it became unlimited supply. They really put themselves in a bad position. And since then, you've now had a shit ton of other companies come out, and realize, okay, we can do smart contracts, quicker, faster, better, cheaper. And I think I agree with you totally. I think Heath is in a lot of trouble. They still are benefiting from the first mover advantage. That's the only reason why I think they're in the number 2 seat. But in the long run, they're already way too obsolete, I think, to be the smart contract leader in the future.
Yeah. I mean, just to kind of wrap up my thoughts there, I do think that this is something that I don't see the like ETH community discussing much, but it is the most decentralized network. It is that. And so I think what they have failed to do is play to their strengths. I think really what they should be doing is appealing to nation states to do large scale financial transactions on ETH. Like having to pay $500 for a transaction, like obviously that's not for end users. But I do think that the actual thing, like the strategy that they should lean into is like, don't compromise on the decentralization, lean into it and like try to position yourself as the platform that is like the most secure and decentralized. And it's like, cool, there is a market for that, but it's like muddled. They don't really, there's no coherent path forward for the ETH ecosystem. There's a lot of infighting right now. And so I do think that is showing, I think it's reflecting in price today. People are starting to understand that there's a lack of like long-term coherence there.
So if we could shift it into a Bitcoin conversation now, there's been a lot of discussion about a US reserve. And I'm just going to give you the open floor on this one because there's some people who think it's not happening. We're under the belief that it is going to happen. And we've actually advocated or discussed the benefits of having it be a digital asset reserve as opposed to a Bitcoin reserve. What are some of your thoughts on that matter? And that basically setting the standard for other governments around the world, as well as central banks, to begin buying these assets, putting them on their balance sheet and using it as a hedge against inflation, or as just getting ready for the next financial system and wanting to own a piece of that infrastructure. What are some of your thoughts there and what that could mean for regular people like ourselves?
Yeah. I absolutely think a Bitcoin strategic reserve makes sense. And I also think a digital asset strategic reserve makes sense. We've started to see more nations across the world, and the US just passed an executive order on this, on creating a sovereign wealth fund. We've seen governments start to play an active role in private markets. And so if the US really truly wants to become the crypto capital of the world, I do think it makes sense to start getting exposure at the government level to various digital assets, specifically ones that it can strategically better its position as a nation in. And so this whole meme of like American made coins, like that obviously is a factor there. What I'll zoom out and say is I am usually extremely conservative. I'm not going to give like a price prediction or anything, but I'm usually like very conservative with communicating that like people need to be level headed about this stuff. But again, going back to thinking like game theoretically on this, if the US government, the issuer of the world reserve currency, the US dollar, starts to accumulate Bitcoin, what signal does that send every other nation state across the world? If you are in some like smaller developing nation and you see the people who get to print the money that everybody else uses start to buy some other asset, it is obviously in your rational interest to start to accumulate that asset as well. Because if the people who can literally just print the money start to use their money to buy that new asset, you need to hedge. You need to start accumulating that. Otherwise, you might just get like left in the cold. So, if the US does it, I think it sets off an international arms race to accumulate these assets. And so this is one thing that like it obviously that is like bullish to communicate. And usually I'm very conservative with this, but like think about it. Like that logically holds the power of the United States and its financial system. If they start to use that to accumulate Bitcoin, that just an international arms race, and the amount of we talk about institutional capital flooding into the space. Very few people have talked about like what nation state capital looks like, and that's like a whole other game. And so I don't know, as somebody who's been in the space for 8 years, that's definitely the craziest thing that I've ever, like 6 months ago I was like, there's no way that'll happen, because that would be insane, that would be too crazy. And now I'm like, Jesus Christ, this might happen. So yeah, I don't know, that is a huge variable to watch for sure.
So, Johnny, I'm going to get into an ETF discussion while we have Austin here, guys. We got 9 minutes left with Austin. Help us break that 1,000 likes. I believe we're at 750. It's going to take a Hail Mary here, but I think we can get it done on Good Morning Crypto. Now, I do want to give another thank you to you for giving us the time today. I think we're going to be able to clip this up and put these all over social media. You've already said many amazing things, but let me just break this down. So when we look at the biggest catalyst here in 2025, a lot of people think it's regulation. You've discussed the tokenized assets part of this. But what I think we're going through is basically growth pains with the crypto industry. What are some things that regular people who are in our live chat right now can do to set themselves up for success? Do you believe that regulation is going to change the way these markets operate? Or are we still going to have another 4-year cycle here in 2025 where things become overvalued and then they go into a bear market and become undervalued once again? Nobody has a crystal ball, but I'd love to hear your perspective on this.
Yeah, I would say stay level-headed. And actually, we were talking about this earlier. Come in, have personal, if you're going to be investing, have personal financial goals and stick to them. We're talking about how Merlin lets you set targets for like when you come in and you dip your toes and before you've made like mind-numbing amounts of money that like juice your dopamine like crazy, have price targets on when you're going to exit. As somebody who has ridden this roller coaster and made a bunch of money and lost a bunch of money too many times, when you're first dipping your toes, set price targets for when you're going to exit, and like use tools like Merlin that like help you make that easy for you to be like, okay, cool. If I double this position, obvious, that's like gonna really impact. Like I can get a new car, I can like send my kid to a better school. Like come in with a level head and stick to that. Like and use tools that help you stick to that. Otherwise, you will lose that money. I can tell you personally. So with that aside, I think the two things that people need to watch are tokenization and chain abstraction. Chain abstraction is like, there's this crazy stat where it's like, think about all the people in the world who have invested in crypto, but never done anything on chain. A lot of people still don't even really understand what doing something on chain means, but there is this entire financial system that has been built on chain, which is just run by decentralized protocols. But most people, when they use crypto, they just buy crypto on an exchange and they just leave it there. But they're actually not using crypto. They're just buying some asset. The perspective that we have at Omni is that there are so many useful things that you can do on chain. Like you can take out loans, you can buy treasury bills, but people aren't doing this today because it's so complex. It's actually crazy what we require users to do. You got to like move an asset, set up a self-custody wallet, write down 12 words and like keep them in your basement and like don't tell anybody them, and then get a different gas token. And if you bridge, like even as somebody who studied computer science at Harvard, like this is unbelievably complex, even for me, like it's ridiculous. And so the the two trends here that really are going to change this entire system over the next 2 years are chain abstraction and tokenization. We're going to move to a point where doing things on chain, you don't even need to know what chain you're on. And this is specifically what Omni is focused on and how it synergizes with XRP. Like, people don't need to think about the XRP ledger. Like, might they be benefiting from assets issued on the XRP ledger and they're using it in some lending protocol that happens to be on Solana? That's the future. That's how this is going to work. But what we need to do as like developers is make it so that users don't have to think about any of that. So that's what we're focused on at Omni. And that synergizes well with the tokenization opportunity, because that is going to overhaul this entire like on-chain economy by bringing in high quality financial assets that aren't like meme coins and insanely volatile. So those are the two things in terms of trends that I would be watching. I think chain abstraction is really not getting as much attention, because it's more like you have to be familiar with how ridiculously complex it is to do things on chain to understand that's a problem. Because like I said, most people don't know that they haven't actually used crypto. So that's like the opportunity that we're focused on. And then the tokenization, but kind of coming back to the beginning there, set price targets for when you want to exit. If there is some amount of money that will have an impact on your life, don't lose sight of that. Don't get like caught up in the like hype of like, oh my God, I just made this much money this quickly. Maybe it could like double again. It might, it probably won't though. So like if you hit a personal financial goal, lock that win in. You're going to feel much better about it, because things will go down. It might go up 4x later, but like things will go down again. And so like stay level headed about it. This is not some like magic casino that'll just print you money. And if you like get lucky and you hit your targets, cool, lock it in. You'll feel much better about it a year from now than if you like reset your targets once you hit them.
Hey, Austin, remind me to talk to you after the show about being a Merlin. All right.
Yeah.
That was a brilliant plug, and we didn't even have to say it. No, you nailed it right on. People need to learn to have an exit strategy, and that's what we tried to do with Merlin. You guys can click on the link below, try it out for 30 days for free. But what I loved about what you said there was something very important. People are not. Everybody says to me, Johnny, when is adoption going to happen? When's going to happen? When's going to happen? It's not going to happen until someone creates a killer app that's going to make it simple for the users. Just want simplicity. It's got to be simple. Nobody's going to get 12 words and figure out what it is, or putting in the 32 string character address to send money. It's just not, it's never going to happen. But when that simple killer app, i.e. like Omni, comes out, and it can make it simple where people can just, as easy as just pushing a button, send an email, that's when adoption happens. Somebody has to bring all this together, put all the stuff in the background, all the hard shit that nobody knows how to do behind the scenes, where it's seamless. And that's going to be the killer app that I think kind of kills it and kind of enables adoption. And whoever does that, man, you're talking about billions will be made.
And I mean, the cool thing about what we're doing at Omni is like, Omni is not even the app that has a really great UX. What we're building is an infrastructure layer so that any app can have it and doesn't need to rebuild all this. And so the default will become just like people build crypto apps, and they're super simple because they're using something like Omni. So it's not that we're creating some trading exchange or something ourselves that's just like a great UX. We're building up that abstraction layer ourselves so that all of these applications will have it. And like, first, we're selling it to developers, but eventually we're going to get to a point where we're selling it to wallets, where these wallets can like, people can just click a button. They don't need to think about anything. Just as like a final explanation of like, what is Omni? Because I think I've talked about it in kind of an abstract way. What this is you can think about it like the relationship between Robinhood and Citadel. So users of Robinhood can just click, I want $100 of Apple stock. They do not need to think about the New York Stock Exchange placing orders there. They just click a button and they get their Apple stock. But what's actually happening is Robinhood is taking that user order and selling it to Citadel, who is doing all the complex stuff. That's how Omni works. Basically, it's a marketplace between users and sophisticated financial parties. The really cool thing about Omni, though, is nobody knows what the deal looks like between Robinhood and Citadel. And actually, Citadel pays Robinhood for these user orders, which makes people be like, yo, wait, they're the ones doing the work. Like, are they screwing over users? And so the cool thing about Omni is it's an open chain, like it's totally transparent. So you can always see these hedge funds bidding for user orders, which guarantees that users get the best outcome. So that's how we're thinking about it with Omni. It's actually a very similar design paradigm between like Robinhood and Citadel, but we're going to do it for all crypto applications. and all the hedge funds that are participating in the space. So that's what Omni actually is from an architectural level.
That's amazing, Austin. And I think a lot of people are excited about what you've created in the chat as well. I want to give a huge thank you from not only me and Johnny, but from the entire live chat for you taking the time to speak to us today. We learned a lot of insightful things. I'm going to be clipping up a bunch of this, putting it on Twitter. If you enjoyed today's show, guys, smash that like button on the way out of here. What we like to do is, Austin, it's certified and it's verified on this show. We have the best live chat in all of crypto, so we got that stamp of approval. What we like to do out of respect for our live chat is just address some of the questions, and then we'll just wrap it up for today. So some of the things that we've realized is that people are excited about the inevitable tax changes we could see in America when it comes to digital assets. Donald Trump has said on several occasions, as well as crypto czar David Sachs, that we have the goal of making America the crypto capital of the world. And one of the ways that we can do that is by setting up friendly tax policies here inside the United States, incentivizing brilliant people like yourself to not only bring their businesses in our borders, but keep them here once they're created. What are some of your thoughts on maybe the changes that we'll see, or is there any context that you can provide from a tax perspective? Do you think we're going to see massive changes here, or is this just a narrative for the short term?
Yeah. I mean, I never in my life have I seen the US government propose things like, should we get rid of income tax? Like it's clear that businessmen, capitalists are running the government right now, and capitalists tend to hate taxes. And, never have I seen such radical proposals to change the tax structure in the US. So do I think that the administration would be open to changing tax rates on assets built in America? I do. I totally think that's possible. Trump is a really pragmatic guy. And so if he wants the US to be the crypto capital of the world and he wants to pull innovation back onshore, he would totally consider something like that to actually pull innovation back onshore. So that's possible. It's also possible that the way that they tax these assets from a short-term gains, long-term gains perspective changes. It's clear that the administration is looking at the entire tax code, but crypto specifically is a strategic priority for that. So I totally think it's possible that we see changes to how these things are being taxed.
That's brilliant, because one of the things that we've been discussing is that Eric Trump, who follows this show, he's actually commented before. What we know is that he's been the main person pushing this agenda of removing or reducing capital gains tax for some American-made digital assets. But this is another important question that I want your opinion on. Could a stablecoin be a CBDC in disguise? You did a great job kind of breaking that down earlier. Paul Flig asked the question as well. So what would your response to this be? Could a stablecoin be a CBDC in disguise?
Yeah. I mean, just so we're all clear, a CBDC would be a stable coin, but a stable coin is not necessarily a CBDC. And it's not even about whether it's a CBDC or not. Really, it's about the ability for the government to freeze your money, delete your money, and just restrict you from doing things with your money, which tends to be associated with CBDCs. So that's the real risk. What we need is the ability for people to just use their money freely. And with central bank digital currencies like the Chinese yuan, it's pretty clear that they're going to have the ability to just delete people's money and stop them from using it. So if you're looking at these things and analyzing them, that's generally what's associated with CBDCs. And it's possible that a private stablecoin issuer could implement that. And so the things that are negative about a CBDC could happen for a private stablecoin. But the really cool thing about the way that the US government is doing it is they're promoting competition in this. And so the stablecoins that are better assets to hold, aka the ones that can't just be deleted out of your wallet at any point in time, people will obviously opt to use those. So it's cool that it's an open market, because it'll just force companies to compete on the better product for people. And the better product is one that you can't just have your money deleted.
Absolutely. And now one other question that continues to come up, and this one, I'm not sure how you're going to answer it, because I'm not sure exactly what you can and can't say, right? But people are like, Austin, what are your five top cryptos to keep an eye on? What do you consider a blue chip digital asset? Feel free to take that whatever way you would like, but what are some of the things you identify to make sure a project is here to stay, or a quote unquote blue chip in the space?
Cool. Caveat, not financial advice. And this is actually mostly me thinking with my engineering brain rather than speculator brain. So top 5 assets. Right now, I would primarily be, God, my ETH friends are going to be pissed at me. So
XRP community has your back, Austin. Don't worry.
Yeah.
That's right. We're here to support. Throw an ETH one in there to help your friends out.
Yeah. I mean, honestly, so if I'm thinking larger scale blue chips, Bitcoin, XRP, Solana, those are the ones that I see the most structural tailwinds for. if I'm thinking longer tail, there's a few projects that are leaning into chain abstraction and tokenization. There's a few like Ondo, I think is doing a very good job at this. I will say Plume, but also I will double down on the not financial advice because I am an angel investor in Plume. But they're like leaning into the tokenization opportunity. There are other companies in this as well. I think the chain abstraction opportunity is, yeah, like I said, it's less talked about. I think Omni is really like the one like promoting that, but it's like clear that that is like a huge opportunity there. So again, not financial advice, but those are the top blue chip assets that I would be looking at, and are just like more conservative. Like I said, just don't enter this space and like throw your money into some super long tail asset hoping for 100x. Dip your toes. You know, if you're going to invest a little bit in the biggest ones that are going to be more safe. And then if you're interested in like some higher returns, explore the tokenization and chain abstraction verticals. There are a number of cool projects in both of those.
So massive thank you to you, Austin, for making time for us today. Guys, we got nearly 20,000 live listeners here. Hashtag Austin King in the chat. I want to give a huge thank you to every single person who tuned in and joined us for today. Now, I guess here's my question, Austin. We'll end it on this note. Is 2025 the year of digital assets? Some have said it's the year of the stablecoin. Some have said it's the year of the altcoins. I kind of categorize 2024 as the year of Bitcoin due to the ETF situation. Is 2025 the year of digital assets? Is this the line in the sand where we begin to see TradFi start to adopt these technologies? And once again, thank you so much for making time for us today.
Yeah, I would actually say that what I imagine is going to happen in 2025 is what people should be looking at is there's not going to be a 1000x that just happens out of nowhere in some category. But what in 2025, what is going to happen though is there are going to be leaders that are building up that initial momentum and really establish themselves as like the de facto leaders for different categories. And so from my perspective, are things going to like skyrocket out of nowhere in 2025? Maybe, but like I'm not banking on that. Instead, if I'm kind of like thinking with my investor hat, looking at the landscape, there are going to be companies that are like consistently driving momentum, shipping new products, demonstrating progress in 2025. I don't know if the market will like reflect that in a crazy way, but what they're doing is they're establishing the foundation for like the massive lead that they will have in the coming years. And this really is the like the people who win the foundation this year. I think about this a lot with our business strategy that like if we do not win the like leadership opportunity in the categories that we're seeking, it's going to be a huge problem because the people that do win this year are going to have massive tailwinds for all the years to come. So that's how I'm thinking about it at large. So look at people who are like actually consistently driving progress, and like those are the best bets right now.
Austin, last question. I do this very often. Johnny gives me credit. I'll say last question. I'll throw 5 more
So
in there.
Austin, last question means there's about 4 to 5 more to go.
So there we go, guys. Right hand to God. This has to be the last one out of respect to Austin. So again, I do want to say thank you so much to both Johnny and Austin, as well as everybody in the chat. If our live chat could smash that like button on your way out of here. But I think there's an important question that we should address because we titled this episode the 1000x tokenization opportunity. If you could just give a closing synopsis here of why you believe it's a 1000x opportunity and the prospect of tokenized assets really changing the way people think about crypto from that point forward. So thanks again. Final last question. Floor is yours, Austin. We'll wrap it up here.
Yep, cool. I'll answer this in a pretty succinct and simple way. We have bootstrapped an open and permissionless on-chain financial system with really weird assets like meme coins and altcoins. This is cool. It's exciting to see what we have achieved with just that, but it's kind of crazy we've achieved this much with just that. But it's still experimental. It's like we're in the playground sandbox phase. There is just like quite quantitatively like a 1000x opportunity in terms of the assets that are being traded on these open ledgers. And it's through onboarding the traditional financial assets. We've made a lot of progress with decentralized finance, but really where I believe we're at in the journey of crypto is we've bootstrapped the initial versions of these things, but really like we struggle to even imagine what's going to happen as traditional financial assets flood this on-chain ecosystem and really overhaul everything that we built so far. The infrastructure is there, the assets are not, and as the assets get onboarded, it's going to like fundamentally reshape this entire industry.
That's amazing. And Austin, listen, you just made me put my right hand to God, but I see in the private chat, you're ready to keep rocking and rolling. So you let me know. If
Yeah,
you're
I
able
got
to,
like 10 more for sure.
perfect. Let's do 10 more minutes, guys. Hashtag Austin King in the chat. And I want to give a huge thank you. Make sure to ask your questions because this is what it's all about. Giving our listeners a chance to interact with somebody like Austin who has this insight that he can provide. Now, let's have a fun conversation, right? Because there's always stuff that we can talk about. When we think about the future of this asset class, US-based blockchains may have an advantage globally. And we focused on it from an American perspective because, like you can see from my hat right here, we're an American program and we're an American first program. So we're excited about the prospect of companies like XRP being involved in the crypto council that's being formed. And during the election cycle this year on our show, I believe it was in August, we made a massive shift here and we decided to focus on the pillars of the crypto industry under the Trump administration. There were 3 companies that came to mind: Coinbase, Circle, and Ripple. And what have we seen post-election day? Those 3 companies have been involved in almost every major conversation. And one of the latest conversations that we got this week is that Ripple CEO Brad Garlinghouse is one of the leading candidates to be considered for the Crypto Advisory Council to work with Donald Trump and David Sachs on developing regulations. I'd love to hear some of your thoughts there, just open floor, and then I'll dive into the specifics of it. But my belief is this: if we have guys like Brad Garlinghouse in the room creating regulation and deciding what this environment is going to be like, he may have to step down as the CEO of Ripple, but he may actually walk into a more influential role by being able to kind of be involved in and build these discussions from the bottom up. So love to get some of your thoughts, and then we'll continue.
Yeah, I mean, I'm biased. I live in New York City. I was actually at the Ripple office here in New York yesterday. So like keep that in mind with my answer here. Like I'm biased, but yeah, I want American made crypto to win. And I do think that we have an administration in place that has said super transparently, we want America to lead in crypto. And we do have some massive crypto companies in the US. And I do think that structurally, the administration can leverage the American lead in the normal traditional financial system to act as tailwinds for growth for American-based crypto companies. So I do think that, like, yeah, that is something that traders are going to be keeping in mind. And I think they're actually already like, I think some people are already trading with that like perspective that it is possible that there are explicit things put into policy that support US based crypto companies. And so if Brad was to leave being CEO of Ripple, that would be surprising for sure. He's very good as the CEO of Ripple. He communicates extremely well. But even if he does, honestly, bullish Ripple, bullish XRP. Like if he's in the room, that would be very good for Ripple and XRP.
Johnny Krypto, I'm going to give you a quick chance to comment, and then we'll roll into our next one.
Well, no, I mean, I think at the end, I couldn't agree more with Austin. I think it would be a big loss, if you will. I think he's probably the smoothest and coolest CEO in the world out there. He really is, man. You just can listen to the guy. He's memorizing. He's a great dude. I think it'll be a big hit to Ripple. I think there could be other people within the Ripple company that could maybe he can assign to go on that committee and achieve the same goal without giving up the position. I hope that's what happens, to be honest with you. But nonetheless, just the fact that we are sitting here and talking about the president building a crypto working committee is fantastic news for America. First time ever, pro crypto administration, pro crypto SEC. Abs, I just heard we got a new name for a pro crypto CFTC. I don't know if we got some time to bring that up. Maybe we talk. I'd love to get Austin's take on that because I guess he's an Andreas Hortz person there. So, I mean, you're starting just to see all of this stuff come together, and it just feels like so much bullish momentum coming in 2025, Austin. And my question for you before we let you go is there's always this talk of these 4-year bull cycles, 4 years. Now, that's going to be the same. Nothing's going to change. But for me, in my engineering brain, it's too hard to imagine that for the first time ever, like you said, this industry has literally been, I like to call us like geeks and nerds, right? It's been led by us. We've been kind of dominating this thing and investing in it for 15 years or so on and so forth. But now it's over. That's done. The big boys are here. They've taken our sandbox away. They're playing in it. We just get to play outside the sandbox looking in now, right? And these 4-year cycles that we've become accustomed to, well, now we're going to have regulations coming in. Our government has embraced it. First time ever in our history, we have a crypto cabinet chair member. It's never happened in our lifetime. I struggle with thinking that it's just going to be the same old normal 4-year things going to go up and drop down 9%. blah, blah, blah. I'd love to hear your thoughts on what you think this market is going to look like. Does this become more like a stock market in the future, or do we just continue along with these normal pumps and 90% drop-offs every 4 years? Curious to your thoughts.
Yeah, I do think the cycle structure is changing to some degree, at least. And so we have certain things structurally that will make it harder for there to be just like a 90% fall off. And so one, like we've been talking about, there is policy being put in place which expands the growth opportunities here. If we can tokenize more assets, no longer are we contained in our own alternative universe. We're going to start onboarding the existing traditional financial system. So that increases the opportunity for growth. And then what decreases the opportunity for that 90% collapse? I do think that by having wider access to these assets, like these various ETFs, will dampen the downside when it comes, just because more people can pick it up. And if you have seen Bitcoin make insane returns over all these years and you see it drop 25%, it's more likely that somebody like my dad is going to be like, I might not fully get this, but I have this Charles Schwab thing that lets me click a button and I can get some Bitcoin. So it does open up a new class of investors who, don't have to go through the process, don't have to identify as a crypto person enough to go create a Coinbase account and put in all the work there. It can be people who are just you know what, this thing, this whole asset class historically has just rocketed and I haven't done it before, but I'm smart enough to know that this thing's down 25% over the past month. Now is probably a good time to buy. I can hold this thing for a few years. And so I do think that structurally things are changing pretty substantially for the industry.
A massive thank you to Austin, guys. One of the questions that we're getting in chat, and this is something that you may be able to take a different angle on here, is he says, engineer here, Austin, please explain why XRP and the XRPL are more thermodynamically sound than Bitcoin. Is this something you can even address, or is this too off the top?
I mean, I don't.
It's thermodynamically.
This is like Chinese, and we're an English program, guys. So I want to give a huge thank you to I almost said Gonzo, to Austin King. Big shout out to Gonzo and Mario as well. Johnny, any quick comments, and then we'll roll into one.
Well, I think he's just talking about the pure energy it takes to mine a Bitcoin, but I'll defer to Austin. Yeah. But I would imagine that's what he's talking about there, is how it's different from the fact
it's more energy efficient.
XRP's XRP's pre-mined, right? But go ahead, Austin.
Yeah, no, it's not even pre-mine. It's just the energy it requires to produce blocks on the XRP ledger is less than 0.1%. Don't quote me exactly on that, but Bitcoin, the way that it validates blocks is effectively by spending a ton of energy. That's not the case for XRP ledger. It's actually unbelievably more energy efficient.
So guys, if we could just address one thing in Austin, I know it's 12:29, so you just give me a thumbs up or whatever when you have to go. We want to talk about the Ripple versus SEC lawsuit. Now, there's a couple of different angles we can take here, but our position has been with the appointment of Paul Atkins set to come in April of 2025. This thing is going to be resolved sooner rather than later. And we actually got an interesting update yesterday from our friend Eleanor Terrett, a Fox business reporter. She talked about how the Binance case was put on pause for 60 days, and she's anticipating all non-fraud cases, including Ripple, Coinbase, and Kraken, will probably go through the same process. Yep. What's your perspective on the whole SEC versus Ripple lawsuit? To us, it seems like it's old news. I don't believe it's going to be some massive impact on the price of XRP, even once it's resolved. But there's a lot of people interested in the topic. I'd love to get your take.
Yeah, I mean, personally, I do think that the SEC was acting very much in the disinterest of Americans and America, the nation, over the past 4 years, and it just randomly it let Coinbase go public, and then came out later and started attacking them, saying it couldn't do what its fundamental business was doing. It's just nonsensical. It's clear that Gary Gensler had an agenda against this industry and just failed to provide regulation that hurt everyday Americans, and it hurt America strategically. And so I think what's happening right now is Trump is somebody who has dealt with just Elon too. Both of these people have dealt with just ridiculous intervention by governments, and just slowing down their businesses. So yeah, they really empathize with these businesses, and they're kind of I don't want to say they're gutting the SEC right now, but it's clear that the SEC is seriously being chopped down because it was committing serious overreach for years now. And the new administration is here, and they're this is nonsense. We want America to win. So stop hassling these companies. And it's possible that a number of these cases just get put on the freezer for a while, and like maybe even dropped longer term, because frankly, it's crazy that they were even like charged with these things in the first place in many cases.
I completely agree. And it's interesting because what our perspective was at the time was that it was an opportunity for the entire industry to come together and kind of create some form of clarity. And what we saw was projects like Ethereum and Solana and Coinbase. These projects were actually celebrating the lawsuit against Ripple all the way back in December of 2021. So
yeah,
any thoughts there? Just quick comment, I guess.
I mean, just think about their interests. Like they're competitors. If you see your competitor get slapped, you're probably not going to be too upset. Like,
agreed.
But you got to be smart enough to realize once your competitor gets slapped, guess what? You're probably next. And that's the part they didn't realize, Austin, is they were all laughing and cheering when Ripple got sued. And we're sitting like, no, don't be happy because you're next.
Yeah.
And sure enough. But I got a question for you, and Abs kind of has it highlighted here. Somebody actually asked us at our Freedom Conference this week. Everybody, thank you, Abs. That's exactly where I was going. Everybody seems to think that there's a private and a public ledger for XRP, and that the private number or value is going to be much higher than the public XRP price that all of us own. So can you give some clarity, since you worked at Ripple? Is there any truth to the fact that there's two different ledgers and that one is going to be much higher priced than the other in the future?
Yeah, I can see where the motivation for this question came from. Answering your question directly, there's one XRP. It has the same price everywhere. But where this question is coming from is there's this new proposal on XRP Ledger for this thing called permission domains. And effectively, it's a way for tokenized assets to onboard. And like, you know, if somebody wants to issue something that requires KYC, they can do that. And like XRP Ledger is leaning into this because they want to onboard the world's like the traditional financial systems assets. And some of those require KYC. And so that might be what the more like private side refers to here. The cool thing though is the like totally kind of like unpermissioned side of XRP Ledger is powered by XRP, and the more private like permission side of XRP Ledger is also powered by that same asset XRP. So there is no divergence in the actual asset there.
Yeah,
and
so
that's
in other words, private meaning more so the information. Some of the information on there would be private, but not that they would have two different prices, correct?
Yeah, I mean, yes, that is accurate. And zero knowledge proofs are something that actually could be a really cool way to like scale KYC, where we unblock traditional finance from onboarding. We still do it in a privacy preserving way so that like nobody sees my like driver's license number on a blockchain or something. But an institution that I'm dealing with like knows I'm not a terrorist.
Absolutely. And that's probably an important detail, right, Austin? Now, I do want to give a huge thank you. Massive thank you to Johnny. Massive thank you to Austin for making time for us. I know our entire live chat is saying thank you. They appreciated all the advice. So I can't thank you enough for making time for us. I'd love to schedule a time to do it every couple of months. I think this is a very insightful conversation for ourselves as well as the overall community. Any final words for today? And again, we can't thank you enough. This is a phenomenal episode. We're looking forward to many more.
Yeah. I mean, thank you guys so much for having me. Everybody who's in the audience and watching this, thank you for joining. And I'll kind of give a final plug, honestly, for Merlin here. And it's because it's like good. I've been in this industry for a very long time, and I have made and lost a lot of money. I've seen many other people make and lose a lot of money. So if you're coming in, identify what would be impactful to your life, set exit targets, and don't deviate from them, and use tools that help you not deviate from them. And Merlin's a great tool for that. So thank you guys for having me on, everybody. Thank you for the questions. Yeah, I love seeing the support, and I'm very excited about where this industry is going. I do think that we're like, people don't understand what's coming next, and that is extremely exciting.
And it's people like you who are going to teach us what we can anticipate going forward, Austin. We got 21,900 people here. If you enjoyed today's program, show us some love, smash that like button. And we have a saying on this show, Austin, things are going to get so great, you may even get tired of winning. So we're going to end it with one of our favorite commercials. I want to give a massive thank you to Johnny, massive thank you to Austin King. And we love you guys. We appreciate you. We'll be back in 23 hours. And like we always say, Warriors,
You're going to be so proud of your president, and I don't care about that. But you are going to be so proud of your country, because we're going to turn it around and we're going to start winning again. We're going to win so much. We're going to win at every level. We're going to win economically. We're going to win with the economy. We're going to win with military. We're going to win with healthcare and for our veterans. We're going to win with every single facet. We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no.